Welcome to the Stage Analysis Members Weekend video. It's Sunday the 31st of July and a little bit to go through tonight. Usual weekend content. I'm gonna start off with a little bit of a feature on the solar group. I did cover part of this on Wednesday, but then we had the climate deal agreed late on Wednesday, Thursday. And that obviously sent stocks in the group soaring on Thursday, and a stage 2 breakout attempt in the ETFs in the group. So I wanted to start covering the group in a little bit more detail. So there's clearly some institutional money flow going in there, and obviously an early stage 2 breakout attempt with that obviously change of behaviour. So and then going to go into the major indexes, going to have a look at the sectors' relative strength, the industry groups' relative strength, what's been moving in there. As you can tell, solar had a huge move, so that ran all the way up to second in the group. So that's one of the big movers. But there was a number of other areas that moved quite strongly as well. So have a look at those, as well as the IBD bullish percent. Industry group bell curve, how that's changed. That's actually shifted this week out of the stage 4 zone and potentially into the stage 1 zone, with a move from 38% to 44%. So on the distribution curve, so that's also showing some near-term promise, with many more stocks shifting out of stage 4 and back towards stage 1, and a few others moving into stage 2 as well. But the vast majority is obviously in the lower half of the range. So we'll cover that a little bit later too, as well as the market breadth and what's been going on there, and finally finish off with the watchlist stocks from the weekend and Thursday's post. Have a look at the combined ones of those and see give you an idea of what I'm looking at on the long and short side on both of those. So right, let's start with the solar group today. So I've highlighted I've done a stage analysis markup of the TAN weekly chart, which I showed to the members on the midweek video on Wednesday before this started moving. It was still in stage 1 at that point. So as it was breaking out, it was still quite an early stage 1. This has come up in the Twitter. I've highlighted it in my Twitter feed a number of times over the last few months, as it started obviously turning into potential stage 1, as it started to break above that 30-week moving average and the stage 4 range that had formed after the initial stage 4 breakdown, and it had gone sideways for many months. It started to move back above the 30-week moving average, and for that, all through May, we had multiple stocks in the watch list for the group starting to appear as they started to develop base structures as well, and they've been obviously basing for many months. So started to highlight some of those, and then obviously started talking about it some more through June, as it continued to consolidate around that 30-week moving average, and we started to get some more positive developments in there, and it continued to come up in the watch list. And then obviously this week, it's been multiple stocks have been in the watch list in advance last week and into this week, so in advance of obviously this stage 2 breakout. So I think it gives a really good idea of how the stage analysis method works in that regard, in that you start to look for stuff in the transitional state. You're looking for as stuff is starting to move. We've got this area in here where we started potentially to start to move back into stage 1, obviously early of spring type action in here, as it started to turn back up again. And we start to get stocks appearing in the watch list, and then you start to see a group theme developing, and you can see that potentially a group is shifting from stage 4 maybe into stage 1. Doesn't always necessarily complete and move into stage 1. Sometimes it just makes a bear flag and rolls over once more. But as they continue to show up in the watch list over many weeks and months, then and the group starts to show up and starts to base itself, so obviously it's a little bit of a lagging indicator compared to the stocks, then obviously that starts to move it more to the forefront. And so that's how it works, and so that you're then in position to get in either in the later part of stage 1 or on the early stage 2 breakout attempt, and on any kind of backup. So at this point in here, we'd be looking the next stage. Now, the initial stage 2 entry point is right at the breakout point, but then you would be looking for obviously ideally some follow through action in this, and then the secondary entry point in this would be potentially on a backup that then held the support. So it does pull back to the breakout level, this kind of area in here would be where we'd be looking for the what we call the secondary entry point in the stage analysis method, or it's known as the backup to the creek in the Wyckoff method, and it's one of the favoured entry points in the Wyckoff method as well. So as I said, this is a bit of an early stage 2 breakout attempt in TAN. It is the group ETF, so some of the individual charts have had much better base structures, but as it's only had a small stage 1 in comparison to the bulk of the price action formed during its stage 4, where it was just obviously going sideways here. But you can see the strong volume coming into the group this week, more than 2 times the average weekly volume just in this one, if you compare to last week. So I used the 10-week average for when I do the comparison, I think similar to IBD. I think obviously from Stan's original book, he only ever said that you needed to be the 4-week average or more. But in the past, I've also used the 52-week. I don't think it really matters what you use in terms of, it's just we're looking for strong relative volume, and ideally at least 2 times. It's ideally should be a lot more than that and should really stand out on the chart. So if it's only just more than 2 times, then it's not showing exceptional volume. It's just showing strong relative volume. So also, another thing that we look for in stage analysis method is this, where we're moving above what we call the Mansfield zero line. So the zero line is the 52-week moving average of the stock divided by the S&P 500. So this blue line in here is the zero line. So once we start to move back above that, it shows that the stock is outperforming the S&P 500 on a relative basis, and then we want to see it hold above that or potentially move in line with that, and then as it breaks out, we want to see that also breaking out, or ideally you want to see the relative strength actually leading the price action and be making new highs before the price action. So it's a good example of that. Again, as you can see, this high here from back in October, and down here you can see if I draw a line across there, you can see relatively actually the price action is much lower than the relative strength line. So the relative strength line is actually in a stronger position than the price action here in the group. So this is a potential transition into early stage 2, but one of the major problems with this chart is that we can see is that we've got this massive shelf of potential resistance here. So you can see all of this area through here, which it's moving into currently, obviously was the major trading range where it moved, where it was the majority of the stage 3 range developed. So potentially that could limit any near-term action if the volume subsides somewhat. So if we do get a push up towards the top of that, you've got a key level there at the 100 level, then potentially this could form a higher base structure before obviously attempting to move higher. So that's one potential scenario, or we could be, the resistance could make it fail, we could get an up thrust type action and it could start coming back into the range again and start to form a broader structure within this area, ideally in the holding the upper half. If it did fail and start moving into the lower half again, then that potentially would be a major failure. So if it does make an up thrust here and start to pull back in because of this large volume shelf and start to chop around in this area, then potentially that would give the moving averages more time to turn up, and then you might potentially get a further entry point down the line that then moves it into a more convincing stage 2. But at the moment, this is considered an early stage 2 breakout attempt. So look at it on the daily, you can see that massive volume that came into the group ETF here on Thursday. Individual stocks as well, there was lots and lots of volume, and it's not just the climate deal, there was also earnings results as well, and that obviously helped with earnings results, although most of them seem to be fairly positive. ENPH was the leading stock out of the gates on Wednesday. That jumped really strongly, and that's now up near its previous highs, so potentially an area of short-term resistance. So as with this, as I said, you can see the key characteristics on this chart, on the daily chart here. We've got this red 200-day moving average line. We've got the 21-day shorter-term moving average here, and we've got the 50-day. So at the moment, that's why I say it's an early stage 2 breakout attempt as well, because these moving averages are in the wrong order at the moment. The 200-day moving average should be underneath these 2 moving averages. So once this might need a little bit more time to develop. As I said, we could potentially, if the volume continues to be strong, we could get a thrust up towards that 100 level. We could potentially form a jumbo cup and handle type pattern. But obviously, if it does consolidate in this area here, you don't want to see it to come back into the range. So ideally, it needs to hold above this kind of area in here, and this 200 to give this 200-day moving average a chance to flatten out and start to turn up. So if it does move up and then start to come back in again, you'd want to see it. You want to see it potentially hold a little bit of VCP action and then start to push out again. But obviously, anything can happen. As I said, this could quite easily roll over, turn into an upthrust, and come back into the range again. If it did that, started breaking below that 200-day moving average, and the 50-day started turning down, then potentially that would get very negative very quickly. So obviously, consider both scenarios, but at the moment, we're looking for, obviously, with the stage 2 breakout attempt, we're looking for follow through at the moment, ideally strong follow through for multiple weeks. So if we look at the group as a whole, you can see on the week, this is the 1 week moves in the group. You see the vast majority had double digit moves. Got only this China Recycling Energy Corp had a negative week, but vast majority had 10 to 30% moves, with a couple even stronger, 60% there in Maxon, Sun W. I'll go through a few of these. Let me see on the, actually I'm going to go through them on individual charts. So come out of those ones. Let's go through some of the individual charts. So ENPH, I did do a piece on this on the midweek video, so I won't go into too much detail on this one. I had that stage 2 breakout attempt on Wednesday as it came through and then pushed through and hit that near-term resistance. So we go back to the weekly chart here. You can see it's at the top of old resistance here. So it butted right into that. Strong close on the week, but it's had a big move on a single week. So strong relative volume as well. So it made a stage 2 breakout attempt, but failed to commit above that obviously the ultimate top of the range there. So potentially we could be looking at this consolidating within this range for a while here. As I said, a bit of a broader pattern developing potentially. We'd be looking for this to ideally hold in the upper range of that bar there. So go back to the look at First Solar. This came out on Thursday. This again had earnings, big pop on earnings as well. I think it had earnings on Friday. So moved strongly on Friday following the pop on Thursday. So again, coming out of a classic Wyckoff type structure here, you've got your original selling climax, automatic rally, secondary tests, and further upthrust secondary tests moves in there, and spring type action at the lows, further spring type actions within here, and then it started to push out, and then we've got this strong volume breakout for 2 days here on the climate deal and the earnings. So significant bar on that one. You can count this entire move here as a potential combo bar there. So a big range there. Ideally, we'd want to see this hold above the top of this range. So in this area here, that 200-day moving average, you wouldn't want to see it drop back below there. So any kind of move here, we're at that key 100 level in this as well. So if this does consolidate, you'd want to see it consolidate in this kind of range in here, and then we might potentially get that secondary backup entry point develop in that one if it does manage to do that. SEDG also talked about on the midweek video with the members. So this one popped out on Thursday as well, but struggled to get above the resistance. Managed a little bit further on Friday. Reasonable volume, a little bit of a volume pop there, but nothing massive. So again, coming out of a Wyckoff type structure here, you can see the selling climaxes, your automatic rallies, secondary tests, and further obviously testing where it made a big up thrust move and came back in again. So broadened out the range, then higher lows, last points of support, a little bit of a local spring type action within here, and then has pushed higher and up and out in this area here. So looking for this one ideally to continue to push for a bit before potentially coming back in. If it does come back in, we need it to hold above the top of the previous structure ideally. And then you might potentially get a secondary entry point on the back up in that. CSIQ not managed to pop out of its range yet. So this one got earnings already. 18th for the 8th, so this hasn't had earnings yet. So again, you can see the same kind of structure on this one, secondary fractal structure in here, a little bit of spring type action in the near term. So if we drop down on a lower time frame on this one, you can see that secondary structure in here that's formed after this stage 4 decline, a V-shaped move into stage 2 would then form this higher base within here. So we've got that little bit of spring type action in here where it started to pop out again. and breaking through some resistance levels. So you can see the fractal nature of the base structures. Sometimes you have to drop down to lower levels, 4 hour, 2 hour chart to actually see the levels more clearly. SPWR, again, into the 200-day moving average here, not cleared of resistance yet. So look at this one's got earnings, 8th for the 2nd of the 8th. So this one has got earnings coming up very soon, day or two. So 31st, yeah, 2 days. So on Tuesday morning before the open. So won't expect this one to move until then. So consolidating at that 200-day. Obviously, if earnings are rejected or not well received, then could form an up thrust here and fall back into the range. But if they are, we'd be looking for this to pop out above that 200-day and then obviously continue to consolidate above that, potentially move up higher or form a higher base structure. But again, you've got a decent base here of 6 or 7 months that's been forming with a few up thrusts and shakeouts at the top and bottom of the range. So again, fairly broad range developing. Same with run. Again, you can see the structure here. It's formed a little bit of a shakeout earlier in phase B of the structure. It's popped out. So hasn't managed to get out of the base structure yet. Let's have a look at its earnings again. So we've got third. So earnings coming up this week for this one again. So it's already had a big move into the 200-day ahead of earnings here. So again, might need to see this consolidate within the upper part of the range, potentially in what we call stage 1B. So be looking for that to continue to consolidate in there and ideally start to get above that 200-day moving average and get these. You can see the short-term moving averages are in the wrong order down here. They need to start to move back above that 200-day. So this one's got some more work to do. Look at the weekly chart. You can see it's just developing in stage 1 here. So you've got a stage 1 base forming. So this potentially could need to obviously chop around in a broader range for a little while, or if it does make an early breakout, there is a lot of overhead resistance on this one to move into. Although even with that moving into there, he's still got a potential 30 to 50, 60, 70% move in there that before it tops out in the resistance area. So there would still be some potential in that if it did move out, but by no means the strongest in the group. There's stronger material in the group that don't have that kind of resistance like ENPH. So ARRY, Array Technologies coming out. This was an IPO not too long ago, back in 2020 there. Had a big stage 4 decline for the last few years. Starting to come out in stage 1 here potentially. Got a bit of a base structure developing down here, a little bit of double bottom, even a head and shoulders type bottom developing on this one. So it's a different kind of base structure here. The 30-week moving average is just starting to turn up. The 10-week moving average is above the 30-week moving average. We've had this big move out. So in theory, this potentially could even be stage 2, but it's very, very early in that regard. It's a popping out. You can see the 200-day moving average is reasonably flat, but it's only just had maybe one or 2 days of flattening there with the move out. So you want to see that 200-day moving average start to turn up for a little bit, potentially see this run for a little while before starting to form a broader base structure before then moving up, and that'll give the moving averages a chance to overtake the 200-day moving average and get in the right order. So it might be more interesting, this one, on a backup or wait for a secondary base to form down the line. But again, this had a big base structure for the last 6 months or so with a bull flag type move before the breakout there. Has it got earnings? This one has also got earnings coming up in 2 weeks. So it's Array, SHLS, similar to Array there, so I won't go through that one. Maxon, this had one of the biggest moves of the week, I believe. So this is the 60% move. You can see this is in stage. You could argue it's in stage 2 with the turn up of the 30-week moving average there and the break above. But again, we've got this big resistance shelf that it's moving into here. So even if it is in early stage 2 here with this big move, volume wasn't dramatic. You can see we've got many other weeks where we've had volume this strong, so it's not the strongest volume, even though it moves 60% and it's moving into an area of resistance. So although it does look reasonable in that regard, there's a lot of overheads. So we'd be looking for this one to potentially form a secondary higher base structure this kind of range up here, I would imagine, and give the moving averages a chance to develop more and the price action to develop further. And then you might get a further breakout later in the year on that one. But let's look at the daily chart. In the near term, it does look promising in terms of it's had a strong move. So it had one of these V-type bottoms that I've talked about in other videos, where you had that V-type bottom and then it forms a higher base structure. So had this quite often in recent times with the tops and the bottoms, where you get this kind of sharp move down, a big move up, and then we form a higher stage one base structure. This is quite a common stage one base structure. You get the Wyckoff range actually forms in a higher stage one base, and the stage four makes a lower low, and then it never actually gets down into that area. So you get this, you still have this broader structure, but the vast majority of the price action takes place in the upper half, and you might get a shakeout move with a spring type action into here, and then this potentially can give you earlier entry points in these kind of areas before you actually get up to the stage two breakout area, or you come into the backup in this kind of area. So that's max on. So we'll be looking for potentially this one to consolidate in this kind of area here. We've got a significant bar on Friday there. You want to see it hold this bar and not come back into it and come back into the previous range. So this is kind of a level between 14 and 15 there. You wouldn't want to see it come much back into there. So if it does come back in, you might get a dip into it a few times, or even an undercut in there. You might get a spring type move like that, or a VCP type action within there. You'd want to see it consolidate within this upper range before then moving up and out. If it fails and you get an immediate move back down underneath here and it starts to cut through some levels back underneath this, then that will potentially become a short very quickly at that point. So obviously nothing's guaranteed. With our stage two breakouts, they can often fail, and the stage two breakout is actually one of the best short entry points in the Wyckoff method. So actually when a stage two breakout fails, it's the reverse of a spring. So it's what's called an up thrust after distribution, and it actually can be a very powerful move, and you can have a very sudden quick move to the downside. You might get a sharp move to the bottom of the range with a major sign of weakness. So it can do the opposite to what you see with a spring type action. So just to be aware of that. If you do obviously attempt to get in at a stage two breakout, and especially try and get in extended at a stage two breakout like we are currently, so this is extended, you're past the breakout point. You obviously don't want to get in more than a few percent past the breakout point ideally, and I prefer to do my entries in later part of stage one personally, or on the backup after a breakout to test the breakout. So always, if you're chasing a breakout, and it's in this case, you can see here you're from the actual stage two breakout point here, so this kind of area in here, you're already 20% above it. If you try and buy it in here, you could easily come back off that 20%. You can easily get stopped out. I mean, the average stop loss is going to be 8 to 10% on most, and some people are only using like 3 to 5% stop losses depending on how tight you're trading. So this one I would 100% be looking for personally on waiting for some kind of backup move, and then potentially that will give you much closer risk management, where you can use the 200 day as your covering guide, or as your stop guide, or the 50-day moving average as that starts to come back up, or obviously once it gets tighter within some near-term pivot lows, so dropping down onto lower time frames, for example, and then coming back into there. So that's that. Nova, similar. I won't go through that one again. I did it on Wednesday, so same sort of thing as Maxon. Right, and that'll do for the group actually. One more thing I just wanted to mention that group. So let me go back to here. So it's not just the solar stocks moving. So TAN is the solar ETF. So it is the whole renewable energy equipment group. So we've also got some others like Plug Power, BLDP, the hydrogen cell ones moving, as well as the wind, etc. So if you look at Plug, it had a pop up on Thursday, same as the others, coming out of a much smaller base structure here. You've only got 3-month base there, and the broader base it had already fallen down below. So a lot of overhead on this one, and it's still well underneath this 200-day moving average in here. So a lot more work for this one to do, and immediately reverse back a little bit on Friday. I think this might have earnings this week as well. Fourth, that one's got earnings this week as well. So again, wait for earnings on those, see how they react, and whether if it does pull back, whether the pullback is constructive. So All right, let's move on. Let's go on to the next part of the video, get on to the major indexes. So